I'm Trading Agent. This is your weekend market recap for Saturday, August 20th, 2022. I'm going to give it a couple minutes and let it breathe. If you are newer to the channel, check out the Discord room. A link is in the description below. If you have any specific questions, please let me know. I will try to answer them at the end of the video, probably while we are not recording. We will be streaming, but I like to share this with friends and family, so I try to keep this concise. So if you have any questions, again, at the end of the video, appreciate it. I'll try to answer them. And if you do have questions relevant to the topics at hand, don't be shy, ask questions. I'm going to give this a few minutes to let this breathe. If you are watching this post-recording, I'll try to figure out a way to, actually what I'll do is I'll reintroduce it again right when I'm about to start. So just letting people come on in. Hopefully everyone had a good night last night. What is up, cat? What is up? Again, if you are following passively, just checking things out, stop by the Discord room. Link is in the description below. I'll just drop it in here real quick. Invite people. Let's edit. Let's make it for forever, forever, ever, forever, ever. What is up, everybody? Giving this a couple minutes just to get it started. What's going on, apes? Hopefully you did not get murdered in any of your ape names. Getting scary out there. The market is about to potentially pull the rug on everybody. I'm going to give this another minute or two and then we'll get rolling. I know I said 8, but you know how people are. Who actually ever shows up on time, right? Do people actually show up on time? And if you're watching this again for the first time, check out the Discord room. Link is in the description. Fun time. Hope it does, especially crypto. I don't think anything's safe. I say that every video, and I have constant regurgitating arguments. Blah. Folks who just don't get that. They want to hide in dividend stocks. They want to hide in meme stocks. They want to hide in gold. They want to hide in crypto. Yeah. Yeah, if you're on time, you're late. That's how it used to be for me. A lot of you guys know I grew up playing sports, and I think everybody I know kind of at some point did. Everyone had coaches. You showed up on time, you were late. Close the door. All right. Let's get this started. This is Dan Max at EXPI Realty, aka the Trading Agent, to your weekend market recap for Saturday, August 20th, 2022. If you're new to the channel, check out the Discord room. Link is in the description below. Always chatting. If you're here to learn, we're here to teach. Keep it real simple. Again, this channel is meant for what? Folks who have knowledge of trading but are a little unfamiliar with how to maximize their edge, how to execute and win consistently. Because again, trading is a probability game. I will tell that to people all the time. If you believe in certainty, well, then I can show you your certain losses, because the market is going to do things that you cannot predict at times. It has nothing to do with your skill at predicting. It is just what? It's a rational game. People are emotional creatures. They can be irrational. The market makers have their own plans. You and I are just trying to swim in their wake. A lot of people try to be really, really smart. And guess what? Being smart doesn't necessarily mean you win. I've said this to folks who know me well. I've met traders who couldn't hit water if they fell out of a boat. But you know what? Their stops, their risk management, their ability to admit when they're wrong was their strength. And guess what? They survive. It's the people who, like me at one point, where, yes, you can be right almost all the time, but you don't have the capacity to limit your losses. And guess what? You win 10 times in a row. You keep betting bigger. You keep stacking chips. And then all of a sudden, one big loss. Kapow! All right, if you got questions relative to what we're talking about, please feel free to ask. If not, I'll probably shut the recording off at some point near the end, and then we can go into just a free-flowing kind of questions and ask. Let's get Bitcoin going. I don't know why. Oh yeah, I was looking at the Nikkei I was showing people earlier. Don't you want to open this up, homie? All right, Bitcoin. I'm going to kind of talk about it as we go. I would just be, if I'm digital currencies, any stuff, gold, any of this stuff that what you think you perceive to be safe, saying it earlier, there is nothing safe. There is nothing safe, folks. It just doesn't work like that. And if you don't know why, I'll say it again. Because in the heat of the moment, when the markets are what? Emotional, irrational, people have to sell, margin calls, hedge fund redemptions, mutual funds rebalancing because they're scared, whatever it is, things get sold. Hey, good morning, Scott. In general, you got to be, what? Cognizant of that. There's just nothing safe out there. And so if you think in your mind that you're going to somehow hide out in the markets and not lose money, and then hiding out in cash, well, it's a kind of conundrum, isn't it? Inflation sucks, but losing money in the stock market could be fast. I mean, Bed Bath & Beyond folks, I think they're going to file bankruptcy. I was reading how suppliers were holding their inventory. It's an absolute mess. People just had this conversation earlier. Let's hide out in dividend stocks. And it's like, well, if they have high dividends, are their businesses sustainable in a bear market? And even if they are, I mean, you're safer in a bond. Remember, bonds have first rights, right? Bondholders, if something ever happened, you get paid out first. Stocks, last line of defense. I mean, think about it. All the other debt obligations, stocks are last. Literally, dead last if a company has issues. Bitcoin, what do we talk about? I don't like that it was doing this here. This like wavy shuffle kind of flag. I mean, there's a lot of people describe it different things. You can just call it a flag, call it a chop zone, whatever you want to call it. And we talked about this this pattern of continuously going sideways and what would happen if you did not break out. That was my biggest concern with Bitcoin, because you're going to see it in a lot of charts. Wave one, or up, pop, and then flop. And now, where does it go next? I don't know. I just tell people, if you don't have a plan, then you have to pray. And if you have to pray and hope, and that's your investment strategy, I don't know who your God is or what God you believe in, but I don't really see him answering prayers about stocks. Let's just call it that. Oil broke below, holding kind of this 90s area. Yeah, Ethereum, all these stocks, all these cryptos, they're all the same. It's like silver to gold. They're all looking bad. We'll get into them later. Stick around. W2I, again, people keep asking me, oh, I'm going to hide out in oil. Well, I guess I have to do it, because since people are like, oh, you can hide out. It's like, no, you can't. Because this is one of the most epic trades I ever traded in, was in oil in the 2000s. Look at that. Kapow! Down. It went from like 150 to 30, if I remember right. Yeah. In the 30s. There's nothing safe. Now, again, I know geopolitical stuff can be a safe haven near term, but if the recession continues on, which it looks like it will, nothing safe, y'all. Just nothing safe. Morning, everyone. Thanks for coming in. Appreciate it. Shoulder line, TLT. What is next? I mean, at this point, oh, sorry, I got distracted. It's got to hold this area. I just locked in an investment rate mortgage yesterday. Not very friendly, 7s, but I don't care. If there's inflation, guess what? My house equity goes up, rents go up, and if there's deflation and house prices kind of stabilize, which I don't care, I'm holding it for 10 years and I'll refinance. Has to hold here. Now, this could be, and again, remember, we go through the evidence. We're always evidence-based. We're not sitting here going, I want this to happen. This want, need, desire is really putting your ego in front of what the evidence is. And folks that know, what do y'all know? What do I say? Your ego is not your amigo, right? It's just not. So we talked about the bond market leading the stock market. Well, if bonds are peeling and rates are going higher, this whole idea of Fed pivot, I mean, we laugh about it every day and we talk about it on this channel. Like, the Feds are not pivoting. And this is what's scary about oil and gas potentially, is because if the Feds are going to manipulate the markets like they have in silver, gold, uranium, whatever your favorite commodity or stock, they're going to go after oil and gold at some point. And higher rates is one of the things that they're going to start doing to slow down the economy, right? QT starts, quantitative tightening starts in September. Let's see if they actually can do it. It's interesting reading Twitter because, and FinTwit, I mean, everybody's wrong. And it's almost like, pretend all of us are like Elon Musk and we're looking at Twitter and all these FinTwit and we're like, is everybody on here a bot? The people in this room aren't. People on this probably video are not. But in general, is everyone a bot? Just trying to pump out the market maker's desires, meaning do the opposite, give you the noose to hang yourself. Dollar. Ale Sakura, our friend from Japan. She's like, bearish dollar. I'm like, you are not correct. Sorry to say. Holding these areas, broke the downtrend, going higher. I say this every time, or every video. Hey, Kat, what is the solution? I mean, we've talked about this. The dollar does not end on this explosion down. It ends like Tesla. Run up to the moon. Run to the moon. And then, pow. Well, here we go. We talked about this. I mean, I don't even want to say it. We talked about it. It hit the upper bounds, which was like euro parity. I can't remember all the other parity, like currency pairs, but it doesn't matter. Dollar going higher. China's already starting to loosen. Now, people say, well, that's good for the market, right? Well, keep in mind, no. The beginning of loosening warns the market that, what? There are problems. Problems, right? Wave 3 dumps very hard, but sometimes there's a little chop. No, we'll get into that because we're going to get to the SPY. I'm going to explain to you guys exactly how I see the market playing out. And we're going to play the probabilities. This is going to be what's going to happen. The VIX, what did we say? It's going to base, and it's not, again, in a bear market, always start on the monthly, y'all. Please, for the love of God, always start out on the monthly. Tunnel vision just leads to more losses than you'll ever see. You had this base and chop. You held up into August, and then September and October got real fun in 2008. Again, we talk about why. Well, guess what? Going into the fourth quarter, every broker, advisor, anybody related to the market wants their yearly bonuses. And if they're getting their ass kicked, everybody unloads. They will absolutely all unload. So, where are we at? August, higher basing, higher lows. The VIX is going to pop at some point. I don't know the reason. People are always like, why? Well, guess what? You don't know why until it happens. And by the time it happens, it's probably too late and you're chasing. Look at this VIX compression. People were like, oh, UVXY. And it's like, now you probably could buy it. I still hate the product. I mean, you don't even need to play the VIX products. You can play other stuff. Because what is the hardest thing about the VIX, right? What is the hardest thing about the VIX? Is the market can still continue to go down. And this thing can just get pounded all over the place. Right? It can get just choppy and sloppy. So your UVXY just isn't consistent. Hopefully that helps. Why I just tell people, lay off the VIX products. They decay. They're just, they're very difficult. Trade them. Like if you want to trade the UVXY for a point or something, fine. But just holding it, I do not bless such. Yeah, better buy puts on individual names. Think about it. The VIX is at 20. Implied volatility is so low. Just buy puts on stocks that are going to do what? Go lower. All right, since we're into the SPY, we're going to talk about the three-wave traps that I'm seeing. Now, again, I hate Elliott wave theory. I'm pretty sure Elliott went bankrupt because he tried to make sure his waves fit what? A structure that continuously repeated. What do we know? They don't continuously repeat. It's all emotional. It's all irrational. Trying to put... Now, again, the algorithms are controlling the market. They try to fit things into specifics, or specific formations, but ultimately it's just not that clean. So you have a head and shoulder. Here's the left shoulder. Here's the right shoulder. Complex head. Because again, everyone's like, oh, the head has to be a perfect straight line. Right shoulder. Wave 1. Wave 2. Wave 3. Now, I apologize, my charts are a little sloppy. But let's start out on the monthly. We got over the point of control for like a day. Came right back under the 20. Bends around. He was like, 20 month, 20 month, 20 month. I'm like, yes. It's like the Jack Nicholson meme where he's like heads shaking up and down. Like, yes. Yes. Trap. Trap, trap. Because once you get traps, what happens? Kapow. This is the monthly. This is dangerous, right? COVID created this liquidity throttle into the market. Now it's over, right? Pulling liquidity out. Game over. It's just a matter of when, not if. Again, high CPI, inflation, all these things lead to recessions, right? Consumers can't afford stuff. So you got the head and shoulders top, wave 1, wave 2. Well, this is the hardest. And again, this is the only credits I give to like certain wave theory, stage theory, whatever you call it. The first wave down, people don't care. Second wave down, people kind of care. They're not really sure. Wave 3 is, oh crap, it's real. Meaning this trend, right? Because you can get what I would consider multiple wave retracements, right? Does that make sense? Like you don't always have to go straight down. So if you're now, and meaning like even in a bull market, stocks that are weak, sometimes you'll see this a little more likely in like small mid caps, they're a little more volatile. This is dangerous because what do we say? There's 3 scenarios. You short arm it here, you get to the 200-day, which is crazy. They literally dinked it perfectly. Or you get slightly above it to 435 and then it pulls back. Well, we all not confirm today's action, gap down, right? Is this the professional gap start of the trade? I personally think yes, but guess what? Probabilities don't mean certainty, right? This gap, above average volume, remember, when's the volume going to show up? On the backside. Because keep in mind, the market was feeding everybody's stock. Didn't want to scare the boat. Didn't want to rock the boat. And then once they're done, they need the liquidity to what? Be sellers. Check out the weekly too. This is what's kind of scary, right? You get real close to the 50-month. And what is that? What is that? It's a hammer. Hammer time. MC hammer time. MC hammer time. And again, green, whatever. Red, doesn't matter. MC hammer time. Hopefully people see that's potentially possible. We'll see if it plays out perfectly. Next week, there's really not a ton going on, if I remember right. I think you got Jackson Hole folks coming in a little bit. Nothing really I'm looking forward to it. Keep in mind, this is the one thing I always talk about too with options expiration. The Tuesday post OPEX can kind of be the day that they release the hounds. The Monday after can be a little bit of a trick. So at this point, let's try to move this faster. What is the next scenario? And this is what I've said. So if this is wave 3, and in the back of your mind, it could just turn into an absolute pounding, right? Do we all agree that that's one potentiality? Durable good orders, yep. Wednesday, I see it I wrote all this stuff down. The biggest day is probably Wednesday, because then you have pending home sales too. You have new home sales on Tuesday. You got GDP on Thursday, which GDP is not going to be great. No. All right, let's focus on let's not get distracted. So what typically happens off the top is you get this down and then a pop. That's one scenario, right? Big down, then a pop. You just don't know when it's going to come, right? And if it's wave 3, so this is how I look at the scenarios. Do we actually retest the highs? That's the one that I see the lowest probabilities. The second scenario I see is down probably to the 100-day, 408. Now write these levels down. 408, 410, somewhere in that. Again, if it's not perfect, don't go, got to 407, Dan. You're wrong. No, look at some sort of retracement down into this congestion zone, right? You have these trend lines. You got all of these candles. Because remember, support equals resistance. This is the last, chop zone, then the next chop zone, right? They're all important along the way down. Because if you look at previous stuff, right? Notice when this one held here, it was the highs from this area, right? Now, again, it's not a perfect science. Someone's like, What's the exact price? What day is it going to be? I don't know. Don't lie to yourself and say you can predict that. Maybe you can predict it sometimes, but I always like to say it's luck, so I do my homework. Right? Man, look at all these lines. Way too dirty. I apologize. It just is what it is. I like to save this stuff. I mean, here, I'll just remove this one just to give a little bit of clarity. That was the filling of the gap and holding. I mean, I can remove that. This is my guess area. Like, I'll just, because what I'm going to do is I'm going to do a little rectangle. Because it's also going to be the 100-day, right? Let's clear this blue guy out. All right. Whew. Now you can breathe, right? I would guess it's somewhere in this area. All right. Clear as day. So that's the next scenario, and that's probably like 50. All right, so the retest is, say, 20%. The bounce from here and pop is 50%. The 30% chances, wave 3, everybody knows. Everybody sees. You back tested the 20-month. Now, when I say everybody, I mean you and I and smart money going, oh, shiitake mushrooms. This thing is about to peel. Onion is about to peel, and everyone's about to cry. So, are there any questions about the SPY setup? You know, because again, I like to look at the SPY as the overall market because the Qs are going to look very similar, right? Q, Q, Q. Pew! We said it was never in a million years getting to 200-month. Back tested an old trend line, or 200-day, I apologize. But look at the monthly. Ugh, the point of control is much lower. Ugh, it's a tech bear market, right? Ultimately led by tech. That's why I keep saying short tech, short tech. I guess I can't actually give recommendations, but I'm saying you should look into shorting tech. And why? Because it had the biggest up moves, right? This was inflation hurts tech the most. It doesn't hurt necessarily every company in the S&P 500 as bad, right? There's no oil companies, no material companies really in the Qs, right? Does that make sense, folks? Also, why is tech hurt the most during inflation? Because remember, they're an output-driven business. Inputs are what are going up in price. Do they have pricing power? I would argue not. And we'll talk about it later. I talk about every video. So I would guess somewhere around 305, 311, somewhere in there. I mean, you're just going to have to think about the market doing what? Trying to trick the most amount of people the most amount of times. Well, when it looks super obvious this is about to tank, that's probably when it bounces. And when I mean tank, like somewhere off the lows, right? But keep in mind, there's going to be a certain subset of folks and the market maker doing what? Trying to position people not to give up on their longs, right? So that's where they have to create some sort of dip that gets bought. Does this make sense? Everybody clear as day. Because again, market is trying to do what? Trying to trick us, right? So if you can bounce off of some level and try to go higher, what does that do to the psychology of the average person? Oh, it's just a pullback. Let's get in. And so they have to pop the market, right? So in your mind, you have to look and expect that bounce. And that's why it's 50% at worst. I mean, I hope this turns into a dumper. But if it turns into a dumper, what is the likely reason? It has to be something geopolitical, right? It has to be something bigger than just the charts. So writing this down, 10% retest, 50% drop and pop, 40%, 30% dumper. Is that clear? Does everyone have this in Zan? Because you could say the levels, well, again, like probably somewhere in the in under 310, 312, say to 305. Now I know that's a wide range, but just keep that in mind. Why? Because the evidence is always there. That's what we're trading off of, right? But look at what Apple, like look at the Qs. Why we talk about they're weaker. Like their bounce is much less, right? Is it clear as day? Like their bounce, I mean, seen there, like Qs, the bounce has always been weaker. So that's where I'm like, if you have a core position and you want to hold it, well then don't be surprised if at some point there's 3 or 4 days, next week, into the following week, or some sort of Jackson Hole crap where they're just like, oh, the Feds are going to pivot. The Feds are going to consider different things. No. Oh, I forgot to talk about the HYG. Remember we talked about corporate debt leading to? Did y'all paying attention to this? You see this breaking 20-day, 100-day? IWM. Here's the next one, right? Here's again, we're building the case so that we're putting the probabilities in our favor. IWM, we said it tops first, bottoms first, always does, right? What is that doing? Does that look bullish, right? Check the weekly. Does that look bullish? Inside candle. Monthly, not even close to the highs, right? Not even close to the 20-month. Back tested an old trend line. Do y'all see how this is not bullish? Now, again, could we be wrong? Yes. Could the Feds all of a sudden flip? Could something change? Peace break out? You never know. We just have to trade the evidence we're given. And it doesn't look bullish. That's all I'm going to say. IWM, probably somewhere in like the 180s. This was the breakout area, upper 180s. 187. Gold. Now here, let's relate back to Bitcoin, all this stuff, because I'm going to roll through these fast. What did we say? At the lows, there was no volume, so it didn't trigger what I would consider the market makers to mark up. They unloaded up here, and they have not had any interest down. Everyone says inflation hedges. No. Baby goes out with the bathwater. You like Bitcoin, you like digital currencies, you like gold, you like silver, you like commodities, you better be careful, because they can get absolutely trashed relative to the market. Probably not as bad as we would assume, right? But look at this. Everybody and their mom was, and again, I get a lot of hate from just people who are like, don't want anyone to ever say anything bad about their trades. What did we say? Once it broke the 20-day, or not even 20, like once you got up into the point of control, right? Once you hit the point of control, you got to be careful. And then it got up there multiple days. Professional gap, gone. Now, I hate to crap all over gold bulls and bears, or gold bulls excitement, but this is where you can go buy some damn physical and enjoy that. I actually bought some silver physical this morning. Just a little test, little taste of some Tavola Black Flag 2022s. Those things are sick looking. Got them for $40 an ounce, which isn't, again, that's crazy. The premiums on silver is nuts. It's not going down, but here you go. Gold, goodbye. Silver. When do we talk about the best time to buy this? When the Feds pivot and capitulate, right? Here it is in 2020, right, with this COVID. Here it is in 2008. Everything after that, punishment. Absolute punishment. Now, people keep saying, well, there's going to be a repricing overnight, Dan, and you're going to be late. Well, I'd rather be late than early, because there's way better trades. Because if somehow that does happen, I'm assuming, or things get worse, silver's going nowhere, tech's going lower. It's really about an opportunity cost, right? I will get into Microsoft at some point. I promise you that. Tech is coming. GDX, lay off of it. When we're ready for the gold metals miners, SILJ, GDXJ, right? Best time to buy it is when? Always when the Feds are pivoting. This is just ugly. We told y'all to get set. I mean, remember, best trade is always to buy in December, ride until spring. Look at that. We talked about the 40s being an absolute monster to get through because of the past. I don't even need to zoom back. Then it failed. How low can it go? We don't know for exact purposes, right? Because why? The market's not rational. It's going to start unloading, and it's going to turn into, it's like all of a sudden everybody gets a stomach bug and just puking. Everyone's freaking out. That's always how it rolls. So GDXJ, remember, it got up to the May lows, which I thought was relatively much stronger in the GDX. Does it clear the evidence? You see? Not even close. Not even close. So, speaking of miners, HYMC, TMC, what's long term? I don't know. It just depends on when you buy it. Yes, when the gold market probably pivots. I just don't like the penny stocks. I don't mind some of the lower priced ones like HL, NFGC, but AG, I mean, I think it's going to 6 again. I'm going to wrap through these quick. There's only one that really matters that I'm seeing right now that has anything legit. Newmont, please do not buy this. I saw now Twitter starting to pump Newmont again. It probably could go to 30 if the markets unwind. You said NFGC. I got that one up here. I like this one. I know Sprott's buying a ton of it. I'm on the monthly. Probably going to be seeing it in the 3s, 2s. I don't see volume right now to confirm that anyone's really buying this other than, again, because notice with gold and silver popped, and what did this do? Flatlined, not bullish. Pass on it. Not really that interested in it. We talked about earnings. Someone should have been there to catch it. It's like, gone. AEM, this one does have volume, so keep this on. Again, this is the one when I said this is the Neo. This is the one. This had volume at the lows, right? It's holding up better in the 20-day. Pray it comes back down to the 30s, because ultimately it will. If the whole market gets shellacked, gold gets stuffed, AEM will probably pull back on lighter volume. And now will it hold 38s? That's what you would hope. But you zoom out and you go, well, what? It can have like this long wick wipeout effect, right? Because look at that. If you would have bought down here, you said, all right, it's holding the trend line. Then it went below it from what, 39 down to 31. Do you see my point? Like, we don't know. But then it went. So what's that long wick? Well, we'll see. Just expect what I always tell people, like when the VIX is in the 40s, 50s, 60s, 70s, 80s, 90s, whatever, guess what? Nothing. Support resistance, out the window. Rational pricing to start purchasing, out the window. It's a fire sale. And as TraderFlorida.net would always say, good buddy of mine, won't give out his name, but he always said, when people want out of the movie theater, it's on fire, the doors are not wide enough. Irrationality, out the window. Everybody just goes absolutely apeshit. X. Again, I like commodities. I mean, somebody was trying to sell me on PBR trading on a 3 times PE ratio. I'm like, X is selling at a 2. PE ratios don't matter. Look at that. Hit the 200-day, bounce. I mean, we played this trade to like perfection. 20-month, 200-day, got in, got out. Now later, we talked about that was the golden double arches, triple arches. Man, Ronald just tags my charts all the time, asshole. 20-month or 20-day, and again, we talked about getting up in the 200-day. Great. We said you probably could buy it down here, and it rallied. Nucor stopped me out right before it went on a run, which, I mean, that happens. We liked it down here. The problem is it just didn't have any volume to confirm with me, but then it broke below it, professionally gap, chopped, and ran away. Now what? It's probably about to roll over, right? If the market starts to peel, nothing's safe. Remember that. Once the onion starts getting cut, everyone's crying, and start peeling that onion. CCJ, I am sorry to say this and just totally haze uranium folks, but this is what you consider a trap, and here is the trap being unwound, and or not being trapped, being set. Uranium, it's safe. No! Oil, gas, I don't think so. It's not safe. I'm not trying to like yell and be silly, but look at that. I mean, every day I get somebody telling me like, uranium, it's safe, it's safe. You got to build those nuclear power plants. Yeah, I get it. Not safe. Not safe. Not safe from selling. Maybe safe long term. VALE, leave it alone. Talked about it. I mean, these all look the same. Arrow. Do you see how all this stuff looks bearish, right? Making lower lows, lower highs. Nuh-uh. Mosaic, starting to peel. Right? Starting to potentially peel. You got the little gap down. Now you got one last time. Now you need to say a lower low. CF, here's another one. If you like ag names long term, I think it's very clear. Look at this. Big down candle, stopping power. Big retest. Bigger retest on the 200-day. Ran up closer, much closer to the highs. Would we not all agree somebody likes this stock? Let's do it. Tech. AMAC comes out with earnings. And then what? Boom. Smoked. Well, it took AMD down. What are we talking about? Lower lows, lower highs. This is the buddy pass because we're going to talk about Apple having this. Goldman upgrades at the high so their friends can sell. The buddy pass. And then what? Pow. Just making lower lows. 20 days is going to break. It's now, again, if you don't know why I hate tech long term, because what? Tech turns into commodities and they just literally sell and undercut each other to death. And it can just do ultimate wipeouts. Ultimate wipeouts. Now the mountain's bigger just means the downside's bigger. Again, failed at the 20-month. As we talked about, like Starfighter, like pew pew pew. Here's the formation. Here's the left. Here's gonna be the right, and there's that crazy head. Adios. But I guarantee there's gonna be someone out there telling me that, AMD's fundamentals are good. And it's like, well, no crap. They're probably great. Doesn't mean the stock's going higher. SMH talked about the point of control in the 240s. Could maybe get up to 250s if lucky. If you were short this, congratulations. Now you're at the range lows. 20 days breaking. Notice all the red volume up here. We'll see it when we see it. It's going lower. Absolutely should be going lower. Apple. So speaking of Buddy Pass this week, Credit Suicide Suisse says upgrade, upgrade, upgrade. 201 price target. Got to get the bulls in. Well, what did it do? Oops. It just filled the gap right here. Hit the point of control because we all agree like this is the top of what? The volume at price zone. There's not a lot of buyers up here, right? But if you're watching this price action, you're like, uh-oh. You're like, I'm back to even? Yeah. Well, now what? Right? Like, this is so steep. And this is why people were like, I don't know, if you watch some older videos, we're talking about shorting up in here, and they're like, you're crazy. I'm like, this steep action is a bear market rally. And speaking of bear market rallies, you know what the average percent, does anyone know what the average percent bear market rally is? Not like Fibonacci retracement percent, like the average rip up in a bear market. Someone type in their guess. I'm just curious if anyone knows what it was, what it is. So Apple, straight line move. Is this not straight line move? Look at this, like 3 days down, like those aren't, like there's no like massive chop. This is just absolute straight line move. It's going lower. That's why we're shorting it up here, like absolutely hard. Now if it goes higher, fine. But do you see the risk is reward? Just like we talked about, if you were looking down here at the range low, then it professionally gapped. It's like, ooh, look at that backup. There you go. Remember we talked about like the backup before the go for the SPY? Same thing. You got to like draw people into sell. Anyone have a guess on the average bear market rally? This is hilarious. So Apple, toast. Right? I mean, I think it's toast. Just watch out. I mean, do you think ultimately with everything going on in the economy, they're talking about laying off people. They're talking about suspending hiring because everything's good? Everyone's ignoring that news until later, and it comes out and they do it. And they're like, oh, crap. Meta. Any guesses on the average bear market rally? Any guesses? Because your guys are going to laugh at this one. Things that you don't see if the market's strong, right? Double top, fail. 35%? No. One more guess. Anyone out there? That doesn't look bullish. I don't even know what else I need to say on that. Microsoft. Average bear market rally is 17.4%. Guess what the rally off the lows has been, depending on which index? 17.6. We'll see what happens. Microsoft talked about the 200-day, talked about the point of control. And Palmy, here you go. Short the absolute crap out of this. Now, what is the thing that Microsoft struggles with? Dollar exposure. Point of control. This thing is an absolute monster. And what's hilarious is that this absolute monster did the same thing in the 2000s. And it went up and then it just went nowhere. And you literally took you till when? 2017 to get back 18 years to get back to even. This is a short. This is the zone. Now again, I can't guarantee that it will go lower immediately near term, but this is the zone you want to short in. Could it retest the highs? I mean, anything is possible, but the probabilities are low. We'll look at today's action, right? Or today, it's Saturday. Hit the 200-day longer. You notice all these wicks? Does this look like somebody's buying this? Can you guys look at this and just notice, like, when it was rallying, you'd close near the highs. Now what on the backside? Do you see the wicks? Somebody has the power to take it. Like, they're selling more than they're buying. We would not agree. Again, stop looking at the colors. But look at the action. Every time you pop, sells, pop, sells, pop, sells. And now people are like, well, what do you mean sells? Well, keep in mind, like, the end of the day, that's why open and close matter, right? Like, what are people willing to hold overnight? Well, that sells me a lot if they don't want to hold it overnight. And they're starting to sell during the day. And the power is what takes it down. And now what? Gap down, red candle. Is this the first professional gap? Or is this the professional gap to start the trade? You build the evidence. That's what it looks like to me. It looks bad. It looks bad. It looks bad, 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 bad. Where's Amazon? Because I'm going to run through some of these other tech names. I usually don't, but they all look the same, y'all. That's the problem here. All mega tech. What's Amazon? What is Amazon? I don't know. Amazon. Same thing. 200-day. Starting to peel, right? If there's always one person who's asking me about Google, and they're like, it's going to 140s. I was like, no, it's not. They're like, it's going to the 200-day at worst. And this, I guess it was maybe it was 130s. I'm like, look at this action. Does that look bullish to y'all? Like, if you drew, this is what can be kind of interesting. If you had like this little trend line, it broke over it to create this perception of what a breakout, and then it failed, right? That's not bullish, right? Look at all of OPEX. The market's holding up, and Google is just doing what? Open high, close low. Because I guarantee if we go look at the weekly, what is it? Yeah, it's a red bar, engulfing bar, right? Ate up the previous week. See, this is all things that don't look bullish tech, right? What's next? Tesla. If the market, I mean, it's funny because if you look at like advertising on Robinhood, it's like, let's buy Apple and Tesla. Like, that's what they're talking about. It's like, damn, oh, look at that. The Robler emmed my golden arches on this. What do you have? A double top. Double top. I'm warning people, and I say this every video. For long, oh, you're going to say hello to the mic? Forever what? Uninvestable. They don't make money. They live off of government credits. This company is way overvalued. Then this candle happens. Now retail this is the future. You don't know how to price them. This stock and Elon are the best. All right, well, Elon's selling and you're buying. Sorry, you're an idiot. And that's not in the mean way. That is like if it's like your parents telling you, like, if you don't brush your teeth and all you do is eat sugar, you're going to have cavities. Well, that's what people are ignoring. So, double top. Let me just clear this off. It'll somehow pop up later. Right? Does that 20-day held? You better hold that 20. Because once the 20 breaks, it can play these games. But once you had it up here, it's like, boom. Now it becomes the resistance. And it couldn't even get up to 20-day. The stock is going to get absolutely pulverized. People don't realize it. Because guess who owns it? It's not smart folks anymore. They all unloaded. NDAQ. You're welcome. I told you guys this is at some point will turn into the waterfall. Very early short. I got puts that I'm underwater on, but I got September's. I just gave up on it because I know what happens is it turns into an absolute waterfall. This is the Coinbase of crypto, right? This is the NASDAQ. This is the actual index. Look at today. The volume started picking up. Professional gap. I told people this thing could be down 10 points in a day, and all of these buyers could get wiped out. Well, look at that. You had 1, 2, 3, 4, 5, 6, 7, 8 days wiped out in 2 days. I know they got a split coming up. Don't care. Splits are honestly the stupidest thing in the world because Buffett doesn't split for a reason. Why would you make more supply and no gain for anybody? You know, now all of a sudden there's hundreds of these. You know, when they do a split, think about it. If you had 1,000 shares in something rare, now you just double and triple, quadruple the supply. It's just natural that it's not going to be as valuable because it's not as rare. Like, splits are dumb. There's a reason why Berkshire will never, ever split his main stock. Ever. Forever. Roblox, things that you don't see if the market's bullish, right? We talked about getting up into the 50 level, peeling like the onion. Look at this blow off top with volume, like this trap, right? Like, it went slightly higher. Goodbye. Now, I think they're a buyout target potentially. I don't know, but watch what happens when you come back to the lows. Tech. What tech ones do we want to go to? Redbox, Tesla, Microsoft. Hopefully I didn't miss anything of major. No, I think it's time to move on to EXPI. I always talk about fundamentals. Like, we're absolutely blowing out the water in the real estate business. And if you don't know where these things came from, it's like, oh, you farted. This came from the 90s. And I'm not talking about 1990s. I'm talking about March of 2021. February being in the 90s. Oh, but fundamentals! No. Your fundamentals are a legitimate reason to actually get destroyed in a bear market. Again, that fundamentals conversation, trying to get everyone to agree on what the right price is. That's not how the markets work. UTHR. We've talked about this one 1,000 times. You could have bought it down here in March, double bottom, higher highs, double bottom, acting great during the markets. Clearly some news. Now you got a head and shoulders top. Does it come back after the shoulder line? I don't know. We've said this over and over and over. If Mike French is listening, he probably knows this. You're at the monthly channel high. Doesn't mean it has to like go to the ground, but it's probably going to play this game where it backfills. Unless they're getting bought out and somebody knows something I don't, I'd leave it alone. XBI, a lot of folks loving XBI. We talked about this. This was the blow off top with the volume. If you're short it, congratulations. We said 95, said could maybe get to 98. Probably going back to the 60s. You see how this works, y'all? Chop, chop, the flop. This was the chop, chop to pop. And we talked about, actually, if anyone's in here, remember, confirm this. We said you could buy this day. Watch for the ride up to the 200-day. Well, got over it pretty good. I mean, I would take 78 to 93 in this market. Well, oh, it got to 95. Dan, you're the worst. You should have known it was going to 95. You idiot. What are you doing? We have faith in you to tell us exactly what's going to happen all the time. It's like, pro. Morgan Stanley. So this is why I like shorting the financials. Look at this massive point of control here, right? These options are dirt cheap. I'm not telling you to do anything, but I would look at stuff in the financial sector, because who owns all of the world's problems? Who's got debt to service against it? Who is holding the opposite sides of a lot of these companies' trades, right? Where is everybody's money going? Are we going to put banks in front of our tanks? Our tanks in front of our banks? Oops. Here you go. Does that seem very obvious, like why the risk reward was worth it in the 90s? JP Morgan canceled their buyback. Well, bye-bye. No wonder it can't bounce worth the crap. Up to the 100-day. Check it out. Looking ugly. Let me pull up the XLF, because that's the monthly I want y'all to see, because the XLF is one of the big ETFs, all this stuff. Man, it's kind of quiet. No comments. That's cool. People are listening. No wonder it bounced on the point of control up in the 30s. Well, now what? Oh, it gets to the 20-month perfectly. Look at that. Now we can start the next ride down. Let's just look at the weekly. Uh-oh, SpaghettiOs. That's a look above and fail. Potentially. Remember, we talk about points of control. There it is. There it be. XLF. Goodbye. USO. Let's get into oil. Wrap this up. Put a bow on this. Stop recording. Remember, I will stick around and answer questions. I'm just not going to stream. Or I'm not going to record, because I want to shorten this for another format. Again, watching this area. I tell people all the time, you got to watch out. But here's what the Feds got to be hating. This is why Europe's got to be in a lot of pain. Natural gas is holding up really well. Oil holding up really well. Now, somebody's asking me, do you want to buy what? Do you want to buy what? You want to buy the market? Or you want to buy oil stuff? I don't know. You're in the range where it probably could fail. ExxonMobil. Is the whole S&P going to revert to the mean? What does revert to the mean, my friend? We'll answer that shortly. Making lower highs. All right. Again, I always like to say, if you are making good money, which you should be if you're following us, and you're executing, you're playing the trades right, you're layering in, you're layering out, you know how to trade around a core, you're intelligent with your trading, you're not just gambling. I'm telling you, look at real estate. People are talking about it's a bubble. You can't have a bubble when there's an undersupply of this stuff, and the cost to rebuild and the cost to build is exploding. Prices are going to stabilize. This is the time to buy. I know higher interest rates suck, but guess what? If you bought houses in the 70s and 80s when the interest rates were skyrocketing, home prices tripled in those 10 years to follow because of inflation. And your rents will go higher. Guess what? If people aren't buying, they're renting. So let me know if you need help with that. I can help you in any state, any part of the world. EXPI, find you a great local agent, because that's the key. And then you also have me. If I'm involved, I am a referral agent. Just like Zillow will take a referral for any transaction, but I actually get involved. So if you have any questions, again, stop by Discord room, links in the description below. I'm going to keep streaming, but the record is done. Y'all have a great weekend. Let's open this up. All right. The stream rolls on. Let's get to questions. What does the whole S&P going to revert to the mean? What is the mean? Yes, everything ultimately reverts to the mean. But what does that mean for you? Because when I say revert to the mean, I just look at a bear market always follows a bull market. In a bull market that ends with a bear market, reverts to the mean. Well, what's the average mean on the S&P earnings? 17. Well, usually it goes below it, right? It usually goes below it. I have questions when AMC makes my tendies. AMC is not going to make your tendies. I don't think it is, my friend. This has got to be K-Pod, I guess. Because he's the one who says tendies a ton. Apes are us. That's hilarious. That doesn't look like tendy time. That looks like game over. That's where I keep warning people. There's nothing safe. There's absolutely nothing safe. So this is the problem with the housing ETFs. So I take what? I talk to the builders all the time. Directional daily, you want to go what? Is this bullish? No, I just talked to Toll and David weekly. Both, one's the biggest luxury housing builder in the country. Another one's a nice mid upper level, not public company. But all of them said the same thing. They are going into a mode where they're literally going to cut spec building completely. So it's only dirt builds. Like if you want to build a house, then they'll build it. They also remember 2008, 2009. And what is the thing? They did not want to overbuild. They want to get stuck back holding. So you're going to see these guys cut supply even more. So now you already have a shortage of supply. And then home builders are going to do what? They're going to slow the roll building. So you're going to have a stability of supply. But I don't think their stocks necessarily go up, right? Like the market's still going to penalize them. Like go look at, like speaking of Toll, right? Like this is what's going to probably happen. Why are you putting in 2 L's? You see what I mean? Like the market's already priced that in, that they're going to be stuck. Well, if you remember the 2008 stuff, like I do, I was fixing and flipping houses. You see what I mean? Like this is what happened. They eventually figured out how to stabilize demand with their supply. Probably going to do the same thing. These things are going to go nowhere, right? That's how I would look at it. I wouldn't want to buy this stuff now. I would rather just buy a house because then you can cash flow it, right? You know, now there's always the joke. If you buy 2 houses a year for 10 years, when you're done with it, you can retire because you're going to be living off the income and the appreciation. At this point, I don't know. I mean, dumping this ridiculous high 20-year spike. Well, keep in mind, and probably why there was a spike. It was liquidity going in from COVID, right? Unlimited filtering of, unlimited inflation liquidity. Well, that's where it finds its way into stocks, right? I honestly think digital currencies were a good way for the market makers and those who are in the power to be to funnel off liquidity into an asset that I think 99% of it dies. So keep in mind, if we didn't have digital currencies when they were printing all this money and it all went into oil, gas, housing, and not the speculative digital currency world, oh my God, inflation would probably be like it is in Germany right now, 32% everywhere. So I think digital currencies offset a lot of the inflation because guess what? Nobody uses Bitcoin as a head, like it's not an inflation gauge by the markets, right? A lot of people hate when I say that, and I'm like, could I be right? I don't know. But I guarantee digital currencies absorbed a ton of that liquidity that literally could have taken oil, gas to the moon, housing to the moon with low interest rates. No. And again, all that stuff did rise pretty well, but it could have been a lot uglier. Does that make sense? Because so I've heard this theory before, and it's like, when did digital currencies blow up, right? They didn't blow up until what? The liquidity went to the highest point. Now liquidity is coming down. Does it come down? We'll see. I'm Jay Kin, and no, I'm not him. Okay, well, I don't know. People who say tendies, I've never met a trader who says tendies that wins a lot. I see them having good trade success at times, but I've never seen that mindset of the apes, the trading beliefs. Like I always look at profits as something you take out of the market, not you just tend it. Tendies, tenderloins, or whatever the different things. Yeah, can't imagine how much crypto Warren Buffett has. Yeah, he has 0, and he'll probably never buy it because again, he's looking for assets that return capital to him. He doesn't need to just speculate. He wants good businesses that return capital to him so he can buy more businesses that can return more capital to him so he can buy more businesses that return capital to him. Again, he's thinking like housing. He wants something that pays a rent, pays him money to hold. Digital currencies, gold, silver, uranium, commodities. He doesn't buy them because they don't pay a yield. But remember, this stuff can do great in inflation. I just don't know if Bitcoin or whatever digital currencies are the one, because I'm pretty sure every time in history there's ever been what I would call, I don't know, currency, the change in currency waves and like who's the most powerful doesn't go out with a war. You know, it goes out with a war. Like the petrodollar, like literally we went into Iraq we overtook them so they wouldn't stop. They wouldn't use another currency for oil. I mean, think about it. All this control of the whole world's, individual economies is to what? Keep them using the dollar. Like we will go beyond and above and beyond to do that. And at some point, is there a world currency? I don't know. And if it is it digital? Probably, but is it going to be Bitcoin? That's the question. I don't know, man. Yep. Be safe out there. Does anyone else have any questions before I wrap this up? Because you've got my time. This is the morning. I was figured I'd give this about an hour and change. If someone had actually a good topic to talk about. Do we want to talk about how to layer and layer out of a trade? Because a lot of people can never do this. They just can't do it. They go, well, I have to go all in. And all or nothing trading is gambling. That's making the assumption that you're going to be right. And I tell folks this all the time. Like, let's just pull up Apple, for example. We're layering into the shorts this week. Did we get in at the top? Some. Did we get in a little lower? Yep. We like the action. And so this is what gets hard, right? People, all or nothing trading is gambling, right? Because now you're assuming you're going to nail the entries and exits. I've been doing this 20 years, and I can tell you, if I back test my trades, what are the odds that I get in at the high and at the low when I'm trading? It's 1 out of 3, which I think is okay. But I know 60% of the time I'm going to be wrong, right? So if you looked at Apple, what does it probably do? It probably gets down somewhere around the 160 to 164 and bounces back to 167. Then it drops. So if you layer it into your shorts up here and you have a core position, let's just hypothetically say you bought 10 puts. You got 10 puts now. You got 1,000 shares short. Well, what's your core position? I would say the stock. We'll say you only have options, right? If options we'll say you have 10 puts. I would say your core might be 3 or 4. And the more you're up, you take them off. And then what? Say you've got October 170s, 175s. You would keep those 3. And then you roll into shorter dated stuff because the trend is now your friend. And now you can take moves more aggressively. Meaning, say it pops. Now you can take like the September 170s because maybe it pops to 167. Again, staying in the money. Buying those, and then boom, it drops 5-10 points. You take those off, you still have your core. All along while you're building capital to what? Take out of the market, not to push the trade, because you don't need to. It should pay you every time. If you're doing 10 puts on something that's going to move points, it's really easy. And you still have your core, whether it's that stock or those 3 longer dated puts that are going to be deep in the money. I hope that helps, because again, that's what gets so difficult about trading, is especially if you're doing options. Unless the move just goes in a straight line and you've got a lot of time, but even then there's going to be pullbacks or counter trends. So why not take advantage of that by the more you're up on the options, and it doesn't really have to even be that structured. Just know your swing points, know support resistance. Because if you can get to those points and you get there and then you take some off and you're like, it's probably going to bounce. Because what happens when everyone gets bearish again, it'll bounce. And then when everyone gets bullish, it'll fail. That's what the market's trying to do. And pretend this was even a long-term bull market. Well, you would buy your stock core position and then you trade around the options. I mean, it's really not rocket science, but it's honestly hard for people to do, because as soon as you're making big money in options, you want to let it roll. And that's where it's like, nope. Put it in your pocket, because there's the time, there's the decay. Time decay, obviously. Applied volatilities will change. The VIX will change. The counter moves hurt your options, like what's your delta. I mean, again, if you don't know all these things of how options work, you don't even need to know the mechanics of options. You've seen it, like when counter trends move against you, and you have out of the money options, they get burned. And out of the money meaning like, say you have the 150 puts on Apple. No, you don't buy those. You buy in the money, so you get the delta. If you don't know what delta is, that's the rate of change for dollar, and it's usually less than 1, ideally closer to 1, because what? For the delta rate of change, for every dollar Apple drops, that's what you're going to get paid. So if the delta is 0.6, 0.7, 0.8, whatever, that means you're going to get 60 cents for every dollar, 70 cents for every dollar, 80 cents for every dollar. Like, that's what you're looking for, not the delta of the 150 puts that's 7 cents. Because that sucks, because if the stock drops 10 points, you're making 70 cents potentially. And obviously the delta will expand as the stock starts dropping, but that's crap. Like, you want to get your 1-to-1s on all, approximately 1-to-1s every time. Big drop. I sold them. Who's still in? Junior miners. What do you want to know about junior miners, Joanne? I talked about this earlier in the video. I've talked about this for weeks, months. I like them better than larger ones because they bounce better, right? They got up to the May highs. The GDX got nowhere close. Look at the May highs. Or the May low. I say high. I meant lows. Sorry, May lows. 30. This got up to 27. GDXJ got from, I think it was like 30. No, sorry. 28. It got up to the 35. By far acting better, Joanne. But here's the thing, right? What do you have to be cognizant of? And again, I'll relay this. If you missed this earlier and you're newer, I will explain to you again why you don't buy gold and silver until the Fed pivots. You just don't. Because again, if the market is liquidity driven mechanism, think about it. The market makers, the powers that be, need liquidity. They need actual shares before they mark something up. Does this make sense? Is this clear? Like, there's no reason to mark up a stock if they don't own a shit ton of it. Just like whatever Ryan Cohen or whoever the hell was messing with Bed Bath & Beyond. He had a ton of liquidity. He bought at the lows, pumped it to idiots to sell later, right? And I'm sorry to call them idiots, but they just got bagged. They just got totally bagged. Well, so think about it here. Do you see the volume? Do you see massive accumulation and like dumping? No. So that's where you do. Gold is the king of retests. Say this. I didn't say that earlier, but it is. Double bottom. Double bottom. Double bottom. Double top. Head and shoulders. Double, triple bottom. Double top. Head and shoulders. Multi bottom. Double bottom. Quadruple top. But actually just a double top. Is this clear why you don't? And again, I mean, look at the monthly. I keep telling folks that the 0.382 is usually the max downside in a cup and handle, because the handle should not go past the 0.382. What happens? Hits the 0.382. Now what? It could play out and chop for as long as it needs. Like, you have to keep that in mind. If you assume gold has to go up, well, then you're not paying attention to the Feds, because liquidity is getting pulled out of the system. Baby goes out with the bathwater. They trash it all. Does this help, Joanne? Did I answer your question on why I think junior miners? Lay off of them. Just let them do what they're going to do, because people don't realize in these smashes, these things go way lower than they should. They go way lower. Oh, it's trading at a discount to production. Well, no crap. No duh. I mean, look at this during COVID. The miners, I think gold was rising and holding up really well. We not all agree. Gold was holding up pretty good, but the GDXJ went from 46 down to 19. Is that rational? No. Did gold pull back 50%? Nope. But their margins, I mean, people might argue their margins may have, but no, not on the $100 or $200 drop in gold. But look, pure and utter irrationality and panic. That's what you want to wait for. Because then look, you see the volume here? That's when the market makers say, gotcha. And I can't say the last part, but gotcha, bud. Now they mark it up. Now they mark it up. Right? Now they mark it up. And here's the distribution phase. They buy it at 17, they sell in the 60s. Does that make sense? And now they let it come right all the way back. And if you look at this whole chart and you're honest with yourself, this is bearish. But this is usually the wipeout phase that comes last, right? Goes nowhere. I mean, I'm always impressed by the amount of idiots pumping gold and silver, because I used to buy that stuff. I used to actually buy their narratives. Can't miss it, can't miss it, can't miss it. No, don't trade it, don't trade it, don't trade it unless there's certain opportunities. If Eric's got any of the fam around, they know the best time to buy gold and silver every year is December into March. Ride that every year. Other than that, unless the feds are pumping liquidity. Again, inflation's high and it's still not rocking and rolling. That's what I mean. Like, the liquidity's coming out of the system. They're dumping this stuff. Just want to know if you can expect a better sell after this drop. A better sell, meaning like a higher price? Is that what you're asking? VIX over 40 and silver at 17. I mean, that's the starter alarm. That's like the alarm just to wake up. The actual alarm to trade it's probably going to be worse, right? Like, think about it. If the baby gets out with the bathwater, I showed you. That was just COVID. Look at the GDXJ in 2008, or the GDX, because the GDXJ wasn't around then. Look at this. Gold was holding up real well. 56 down to 15. You do the math, right? A 75% destruction. Why? Because why not? That's what the market does. It's not rational. COVID. I mean, it went from right before it went from 31 back down to 16, like a 50% haircut. So 50% haircut, I would probably say this is the Ukraine high. 41, minimum 20. Minimum 20. I don't know why it wouldn't hit 15 or 16 again. That's the hardest part about this. And if you don't see that these folks are constantly pumping this stuff, haven't done their homework, you got the blind, following the blind, being led by the blind. Does that make sense? That's why I was just joking about uranium folks like CCJ. Like, they think, yes, uranium prices are probably going to go higher. Doesn't mean the producers have to go higher. And we talked about, if you've been following the channel, the pass on this thing. Yeah, I expect this to happen. But also remember the chop in the 2000s. And remember, 2002 was a bear market and just chopped. It didn't go anywhere. Sorry, I'm trying to draw, but this is what happened. Just chopped. Just chopped. Well, now what? You've got this nice pop. It's probably going to chop. I've said a million times, I think you get back to the 16s. But you never know. Could uranium get replaced by something else? Could aliens come out of the sky and give us, like, power? I don't know. Any more questions before I wrap it up? I appreciate you guys sticking around, and I promise you, this stuff, you watch this stuff and you become more evidence-based. It's literally like playing poker and waiting for top 10 hands and just knowing when to bet. If you're always trading, always gambling, feel like the need you have to do something every day. That's why I just tell people, like, I cut my teeth in day trade and realize, I'm like, wow, I'm working so hard to, like, make a point. And now I don't even have to do that. I work 10 times less and do just as fine. What? Doing nothing, essentially, compared to what most people do, try to scrape out $1. Because then once the trend is your friend, you can leverage the crap out of it. All right, I'm going to pull up Ethereum. What's your question? What's the next support? You tell me, and I'll tell you what I think. What's the next support on Ethereum? Apes are us. I'm just going to draw while you ponder such. I'm going to draw while you ponder such. There's your point of control. 800. No, I don't think it's 800. I mean, that was 891. Why do I have all these dots on here? What are these dots? How do I remove them? Add alert. Oh. This chart is just ugly with all this stuff. Let me open it up. I mean, it's got to be probably in the 6s, but here's the problem with wave 3. If this is a wave 3 setup. Wave 1, wave 2, wave 3 goes to the dirt potentially. Now, what's the dirt for Ethereum? I don't know. I have the older prices from 2019. Go ad free. No, I hate TradingView in the sense that I don't think their charts are that great. I mean, I just feel bad for anybody who's holding this, believing it's always going to go higher. I would imagine somewhere in the 3s would be like the basement. Because, man, the market's not going to be rational when it blows out. But here's the question. It's like, how are you trading it? Are you going to just sit on this short, or do you have to trade it? Because at some point there will be bounces. But it's very clear the point of control right here on the monthly. All right, what was the next support? Right there. Well, after that breaks, it's good. You don't know. I mean, I always tell people, go look at, because silver, like this is the thing, silver and gold are the old Bitcoin and Ethereum kind of mentality. Like, people don't realize this. Like, at least metals have a use. I don't know what the use is always going to be for this stuff. I really don't. And this is not me being a hater, but this is what silver did after, what? The Hunt brothers trapped it and they manipulated the price up. Look what silver did. Got up to, I think it was like, what? Yeah. 40s down to single digits. And then it went nowhere. And then it double topped post-COVID, or post-2008. You don't know. You don't know this kind of stuff because there's not, again, I always tell people that there's no dividend, and meaning like actual return on capital, because again, people, I had this question like, oh, I'm going to buy the high dividend names. Like, ooh, no. Be careful. You're safer in bonds. I mean, you're buying companies that could literally blow up, or they'll try to, and burning cash when they should be lowering their dividends. That's what happens. This is what happens with stuff. It gets absolutely burned. The market is not trying to pay you money. It's trying to what? Get you to buy stuff high and sell low. Well, what if you get stuck in this purgatory? Again, I don't know if there's going to be a better currency, digital currency out there. I don't believe in certainty because I've seen everything get burned at some point. Now there are exceptions. Something gets bought out, yeah. But is Ethereum getting bought out? Silver getting bought out? Gold getting bought out? Bitcoin? Mm-mm. They're all liquidity game. For them to go higher, someone has to be willing to pay a higher price. That's all it is. It's just which one is getting marked up, which one has the better advertising, and what is always the best advertisement for higher prices. Does anyone have that? Know that? What is the best advertisement for higher prices to come in a potential name? Do you know this answer? What is the best advertisement for higher prices? You probably saw it this week. What is the best advertisement for higher prices? What is the best advertisement for higher prices? Nope. 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 No. Nope. 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 No. What's the best advertisement for lower prices? Higher prices are the best advertisement for higher prices because as soon as it starts rising, people get excited. No one wants to buy it low. No one wants to sell high. No, it's the price moving higher. It's the price moving higher, getting people excited. Nobody buys it down here except for Ryan Cohen and all the smart people. They're buying it at $5. I mean, it's clearly a double bottom there, right? Double bottom. Oh, but it starts rising. I got to buy it. I got to start. Hey, it's right. Hey, Dan, it's at 10. It was at 5. You going to buy some? Hey, it's at 15. You going to buy some? They're going to take this to the moon. Hey, you going to buy it? Hey, it's going higher. It's confirming it's going higher. Did you see it's going higher? I have to buy it. I have to buy it. I have to buy it. That's the best advertisement for higher prices. Because think about it. If something's not moving, it's not really has any interest. Right? I mean, that's what I always... I mean, if you watch my Back to Basics risk management trade, I mean, talked about... I literally did the video. I think it was November 4th. I said, the best advertisement for higher prices for Tesla is higher prices. But guess what? Smart money ain't holding this endlessly, y'all. And look what it did. Retested, and it's game over. But this is what gets retail buying. Retail, and I mean retail meaning the average person who knows nothing about a stock or a particular stock. This is now the time when they buy because, hey, did you hear? Did you hear? Did you hear? Everybody's talking. The telephone, texting, whatever media outlet, now they're pumping it. Higher prices are the best advertisement for higher prices. And well, what's the opposite of that? Lower prices are the best advertisement for lower prices, right? I still remember the weeks of gold going into, what was it, 2015? Oh, crap. Yeah, end of the year, 2015. I just still remember, like, it was just in this beatdown session, and it was like, you couldn't find a bull, right? Like, everyone giving up on it. Look at that chart. It was like, well, you had end of year tax selling, literally, remember, middle of December every year. That's a trade. Look at that. Supposedly, gold was dead. Look at that. Last week of December. Everybody advertised for lower prices. No one wants this stuff, but it's going lower. Everybody short it. Oops. Now the bottom starts. Now the run starts. Now the run starts. All right, well, think of it on a smaller corollary, right? What do we want to see sentiment-wise in gold? And what do we want to see to know its bottom? We want to see volume, and we want to see what? Sentiment. I want to see everybody hate gold. You want to see everybody you follow capitulate. And when I say capitulate, I mean, hey, guys, I don't know where gold's going long-term, but I think it's a good buy. I've got to take a break from trading. I'm sorry. You're going to see all these people all of a sudden just be the biggest apologist. I'm sorry if I told you gold was going higher. I'm sorry, or they just literally disappear. I mean, there's people with thousands of followers, tens of thousands. It's hilarious. Where are they? On Twitter. Yeah, I'm on Twitter as well. Follow me if you want. But look, I mean, my threads on Twitter are filled with endless gold bulls. Oh, come on. Nope. And it's hilarious. Good God, we haven't seen things, commodities. Cash is burning into energy. Yep, okay. Got it. That guy's clown. This is by 50% of Oxy. Let's see if I can find any. I mean, the gold bull is probably getting a little quiet. Let's see if I find any of them. Because then I can just warn you guys, like, who you can follow. I don't remember their names specifically. They all have different little names. Silver Chartist, for example. Let's look at how many followers this guy has. 46,000 followers. Do you bet he's bullish? Burnout, no. I've been at a 15-year keys to take advantage of the inherent volatility. Fundamentals. Technically, just a major low is being formed near 18, right? This guy is going to get wiped out. Like that. I mean, does it seem obvious? Like, what have we said? What is gold and silver going to do before it dumps? Or it bottoms? It's going to wipe out. Like this easy 17, 18 bottom. No. Not going to happen like that. If history repeats. Oh, I guess the gold folks are quiet on the weekend because their Friday was murderous. If you don't know Justin Pulitzer's, I'd go give him a follow. Here, I'll even share his page. He's legit. At the moment, it's all sell because it's too bad. What does too bad mean? I'm at the moment of sell-off because it's too bad. I don't know what that means, Joanne. Everything's bad. Everything is bad. Again, keep in mind, be careful who you follow and listen to because once you put their thoughts into your head, it's hard to delete them. I look at the headlines. It's that's funny. Yeah, the gold folks are done, but I guarantee Zero Hedge will be pumping gold and it's not the bottom. That's for sure. I think he mentions gold is going down. I mean, it is. I mean, there's the charts say it's coming. Winter's coming for the UK. Yeah, it is. I mean, pull up the charts. Like, right? Like, you hit the point of control on the weekly, you backed off. Now it's got to come back at least to the 158s. Well, guess what? I'm here to liberate you from your own, like, purgatory of trading in the metals. It's here to tell you that you can study the past to know when this is going to work. Oh, but the gold-silver ratio. Again, I have banned so many people in my Discord room for pulling out all of this crap because they literally parrot everything all these folks have said. Years and years and years. If you didn't sell on Ukraine, we talked about the 2011 highs retest, game over. Game over, because I was long this stuff too. I didn't get all the way out here. And I was like, all right, well, let's see what happens because it dropped. I'm like, again, think about the SPY. You know, the first top gets some sort of lower high. Well, either it needs to be a retest or higher high, but if it's a lower high, watch out. There it was, the professional gap. I mean, we can rehash this whole trade. Literally, I'll tell you all how we bought gold and silver. So, gold does what? Loves to retest, right? What is the middle? Go watch video from December 15th. It's called, Why is Gold Stuck? Right? Double bottom, what we talk about. December, always a time to buy. Always ride it up into when? Into March and April every year. Sometimes February it shorts, but whatever. You start looking for exit. Took some profits, said now watch. It's just like the SPY. Watch for the lower high. Well, guess what? The exact high, that red line is the 2011 high on gold. Took more profits because that candle was ugly. Professional gap, game over, you're gone. Game over. Professional gap, start the move. Again, if you don't know what professional gap is, all the stuff is in my back to basics. What is a professional gap versus a novice gap? A professional gap starts the trade. A novice gap is a trap. The novice gap is what? When retail jumps in, right? So here would be a novice gap. Blow off. Novice gap. Retail. All in. Let's get this. Now what? Just leave it alone. We talked about here possibly double bottoming. No. We talked about the point of control. Fail. We talked about what? The 0.382 on the monthly holding. There it was. Here it is. In this area I thought we'd hold. Bounce. Now you bounce up again to the point of control. It's coming right back down. And what a big pullback. Again, I don't know what's going to be big. I just know I want to look for what? I want to see the market giving up. Do y'all see this? Like, use your... Don't think about what you want. Think about what everyone else is doing. Right? Think about it. Like, we need to stop thinking about what you want. Think about what everyone else is trying to do and know your enemy. The enemy is the market maker. They're trying to take as much money as possible. If you understand how the volume, the action, the points of control work, you're thinking from what's the market maker going to do? IWM, I don't know if it was actually that crazy to me. It looks bearish as shit. Oops, I can't keep cursing. Looked above the 200-day, closed at the low. Right? Let's look at the weekly. Blows out over the top, fails. Look at the monthly. This is not that crazy to me. Backtest, some sort of lower high. Can't even get to the 20-month. This stuff is all probably going to be heading lower. Now, someone's going to buy puts on Monday morning, and they're going to be like, oh, what happened when it bounces? Well, I'm sorry you didn't take your entries at the highs. It's not, I mean, the IWM always leads, right? I honestly thought it was done this day, and that's where I started shorting some stuff, and then it's like, oh, it went a little higher. See how we talked about probabilities? The first entry, is it going to be perfect? Are you going to be spot on? No, it's like 30%. That day looked real bearish. I mean, even had these still arrows here. But what happened? Went a little higher. Got stopped out of some stuff and re-entered. That was part of the plan. All right, I'm going to wrap it up unless there's actually a legitimate question. I don't want to talk about crypto anymore. I think crypto, and again, in a sense, is no different than gold and silver. It's going to be volatile. It's going to get wiped out. It's going to get pulled down with the market. There's really nothing to say. If you want to hold it for the long run, well, then probably you don't want to check this channel. You don't want to look for updates. You probably just want to stick your head in the sand and just pray and hope. That is not what we do. We do what the market's doing. And when we do, we win. It's when we try to do our own stuff, try to fight the probabilities. Swing trader, I got to buy PBR. I got to buy oil. No, bud, you don't. You absolutely don't. You can let that stuff go. But no, I want to. It's a 50-50 trade. You're betting on what? Global instability to push that trade higher. But guess what? When the recession comes, nothing is safe. Do you think people are not pulling back on their demand for oil and gas? Just like housing. Like I said, I know there's long-term housing plays to buy. Why? Well, think about it, right? Now there's going to be no supply. And demand, there's always people have to buy houses. People don't always have to drive. People don't always have to, I guess they need to heat their home. Yikes. All right, folks, I appreciate y'all. You have a great day, great weekend. Again, if you have questions, stop by Discord room. Link is in the description below. If you're trading, again, this is always tell people, your account balance is the mirror. If you're not winning, you're doing things wrong. And you have to be willing to pivot and change. It's like, that's the key, right? If you can't acknowledge your own weaknesses, then the market's going to exploit them. And I say that all the time. If you don't know your weaknesses, you don't know what you're doing, the market is going to exploit your mental weakness. Because again, we're all weak inherently. The market knows that. It's gambling. That's why they build more casinos. That's why they build more bookies. That's why anyone will take your bet in any sport, because they knew as soon as you think you're going to win, you can't acknowledge you won't. And that's why trading is the best game of all. Why? You pick your entry and your exit. You don't have to play blackjack. Blackjack, you bet it, it's gone. You bet on a sport, you have to wait for the result to know. We pick our entries and exits. If you don't realize why this is the best game out there, then you're not really thinking about why it is. It literally is. You pick the entry, you pick the exit. Now, sometimes you might be forced because you're wrong, but at least you don't have to ride it down. This is what's the joke is folks are like, oh, I'm going to ride out the bear market. I'm like, that was your choice. That was your choice. You didn't have to. Oh, but trading's hard. Trying to figure out what timing the market's hard. Well, guess, yeah, that's right. Financial advisors that are lazier than you know what, playing golf 200 days a year, getting paid 2% with no fiduciary responsibility, they're going to tell you picking the tops and bottoms is hard. Why? Because they're not around. They don't know how to trade. They're sales folks. I guarantee you, every one of your financial advisors probably knows, if you're in this channel, knows less than you. They're just great at selling it, going, this is why you can't top, picking tops. Oh, if you miss the 10 best days out of the year, your average return is this. If you do this, this is, yeah, all long-term stuff. But they all know what? A bear market wipes it all out. But they won't say they know when. Because again, 99% of the time, the markets go higher. And then what happens? The bear market comes and wipes it all out. And then it takes years to rebuild. They don't ever want to say the bear market's coming. Because why? Then you don't want to buy stocks. You're going to pull money out of their accounts. Then their 2% goes kapoof. Think about it. They get paid to manage and hold on to your money. That's all. If you tell them stocks are going lower, what do you think they're going to do? Pull their money out. Do you see how the psychology is just, it's all a game to siphon off money from investors. It's literally a joke. But you could do better. And that's why I tell people, like, why wouldn't you create your own trading accounts? And if they're literally going to buy baskets of stocks, you buy the SPX, you buy the IWM, you buy whatever specific ETF relative to the sector you're looking at. That charges a 0.02% management fee to own that. You don't need some clown telling you what to do. Oh, but I don't want to own the results. All right, well then let someone else be. You can blame them for when you lose 90%. In the SMH in the 2000s. I mean, that's honestly one of the reasons why I got involved. Because I saw so many friends and family of mine, and I was already in trading. I was already trading, and I already thought I wanted to be a financial, involved in the financial advising world. I honestly was sick for them because people were buying the semiconductor index. Look at this thing, man. In 2000, it was the future. 105. Down to 16, got lower during 2008, and now they just barely got back to even here in 2018. If you think you can't time the market, fine, but you got to be more worried about what you can lose, because that's always the key. Because once your bullets are fired and you can't get them back, toast. All right, y'all. Good rants. Take care. Have a great weekend. Talk to you guys and gals soon.